Hey, Bulls and Bears, back with another dose of economic reality. It is Saturday, March 11th, 2023. And yes, the economic collapse continues. The latest chapter, a very large bank failure with SVB Bank, the 16th or the 18th largest bank. So, not one of the big five, not Bank of America, Wells Fargo, but still a very big bank as far as deposit amounts, billions of dollars. And this is just one of many dominoes to fall. The entire banking sector is insolvent. All these banks, anywhere from your local credit union up to the bigger banks, they're loaning out money that they don't have. Many people have defined this as a Ponzi scheme. A Ponzi scheme, you always have to have new money coming in, or if too many people want to cash out at once, then the insolvency shows itself. And that's what we're seeing here. And we're going to talk about some pretty big customers of this bank that lost a lot of money, in some cases, tens of millions of dollars, hundreds of millions of dollars for some of these clients. So will FDIC come in? Normally the cap's 250,000. These happen to be a lot of business clients at this bank, including a lot of big Silicon Valley tech firms and CEOs, etc. So will they change the rules? Will FDIC come in with a bigger payout to these people to give them their money back? We'll have to see. But I think this is the beginning. I mean, it's already started. I shouldn't say it's the beginning. I mean, we've seen over the past few years documenting just the enormous amounts of debt and just the insolvency in the entire operation here. But let's go ahead and get into some news here. We're going to show you some screenshots today. And here's how it's being reported out of the Mail. Silicon Valley Bank's Manhattan branch calls the cops on investors trying to pull their cash out of the bank. Not a laughing matter if you're someone that has cash in the bank, so I shouldn't chuckle. A CEO with $10 million in the bank describes this as the worst 18 hours of her life. Of course, this lender was seized by regulators, which is basically a bank failure. And the failure and the panic began to run on the bank. Police were called after about a dozen financiers, including former Lyft executive, showed up outside of the building on Park Avenue on Friday. The bank blocked them from entering. Two cops arrived to secure the building. And let's bring up an image right here just to give you guys kind of a visual of what happened. Right, so let's talk about some of the companies that had funds in this bank and how much they're losing and what kind of broader impact this is going to have. Is there going to be contagion? Yes, I think so. Is there going to be more layoffs from this? Yes, I think so. Are a lot of companies going to lose a lot of money? Yes, I think so. Let's go ahead and take a look here. Roku, the little plug-in there, what do they call them? Streaming device for your TV. 26% of its cash reserves stuck in Silicon Valley Bank. 26%. That's equaling about $487 million. Shares fell after hours. People are selling off the stock, but the company believes that their reserves or what they have left will still be enough to meet their financial obligations for the next 12 months, right? So they're trying to calm down the people that are panic selling the stock. And of course, if you run the company, you don't want people to panic and start selling off the stock because then your shares become less valuable. So of course, you're going to come out with a statement as a company and saying everything's fine. We have enough cash reserves still to operate another 12 months at least. What happens after the 12 months? Well, they didn't mention that in their statement. All right, well, let's talk about some other companies that are also going to be facing some pretty big hits from this failure. Roblox video games, online gaming company, said less than 5% of its cash was held with the failed bank, and it's going to have no impact on its operations. Now, 5% may not seem like a lot until 5% may not seem like a lot until you see that it's $3 billion in cash. The company came out with a statement, quote, regardless of the ultimate outcome and the timing, this situation will have no impact on the day-to-day operations of the company, unquote. So another reinforcing, calming statement from a company that lost a lot of money, that had a lot of money tied up in this bank that was just seized by regulators. So if you're running a company that just had a major financial loss, that just suffered a major financial hit, or you're the spokesperson for the company, do you come out and say, oh my goodness, this is bad, this is going to cause a lot of contagion, and people need to sell their stock right now and get out. Of course not. You're not going to say that. That would be the opposite of what you'd say. You want to be as calm as possible. You want to make it seem like it's no big deal. And that's why even business news channels try to stay on the positive side of things. They don't want to acknowledge that the entire system, the entire banking sector is insolvent. They don't want people to know that. If the people knew the truth, they would revolt overnight. I believe there's a quote out there for some of that. Maybe some of you can find that quote for me. I would search for it, but I want to get into some other news because this is a big story, and I think this is just the tip of the iceberg here. Next, it's not just big companies and CEOs, executives that are losing money. Bill.com, about $300 million in cash, but also they held about $370 million of their clients' cash at the failed, seized institution. And a lot of these clients were other institutions, other businesses, right? So that's what we mean when we say contagion. You can't just have a big bank fail like this and not have any contagion. Of course, if you watch the business news channels today, they'll probably say there's no contagion, that this thing is just limited to this bank. Everything's fine everywhere else. Of course, you and I, you've got to know that's not true, right, by now. The entire system is insolvent. The entire banking system is insolvent. They don't have the money. As soon as you deposit your money into an institution, for example, it's loaned out. It's leveraged to infinity. So that is what is happening. And some people knew how to get out right in the nick of time. The bank's chief, SVB chief, sold 3.6 million in stock just days before the failure, folks. You cannot make this stuff up. Just a coincidence, I'm sure. He didn't know anything was wrong with the company. He just happened to sell 3 million in stock just a few days before the bank failed. So another example of how some people get out before the carnage. Now, of course, we have major publications out there. This one's out of Forbes, trying to keep people calm. Biggest bank failure since Great Recession sparks, quote, overblown fears of contagion, but big lingering risks remain. I'm glad they added that there, but they're saying that this fear of contagion is overblown. We're already seeing the contagion. We see the companies that lost money, the companies that had clients with billions and billions of dollars in the bank. So my question is, how will there not be contagion? There has to be contagion. There already is contagion, just out of the news reports that we're finding today, just one day after this failure. All right, so folks, we've seen this happen in other countries. Now it's happening here. We told you here for years that it was coming to the United States, and now it's here. Bank runs, armed security outside of the banks, people panicking, can't get to their money. What bank's going to be next? Will it be a series of banks? Will it be multiple banks in a day coming down the pipeline here? Will it be another 6 months before we see another bank fail? Nobody knows, but we do know that things are not headed in a very safe direction, because if we start seeing the big five institutions fail or bank runs at those institutions, that's when things are really going to become mainstream and noticeable, right? Let's talk about Jim Cramer. Now, we've spoken about Jim Cramer many times here about how many of his calls are wrong and completely opposite of what happens. Go back to Bear Stearns and the financial crisis. Jim Cramer urged viewers to buy Silicon Valley Bank just last month. That was the Post putting that out. Fox, CNBC Cramer eviscerated for touting Silicon Valley Bank weeks before the disastrous collapse. Inverse Jim Cramer. Yet this guy gets his own show on CNBC. He's touted as an expert, and he's been wrong so many times. I think he lost a lot of people a lot of money. And he's so notorious for being wrong, there's even an ETF, inverse Jim Cramer. So basically betting against putting the opposite bet in on any of his stock picks. Inverse Jim Cramer ETF lets investors bet against the CNBC anchor's stock picks. That's how widely known this is. And of course, we now have Janet Yellen out there warning, new warnings of a catastrophe or catastrophic default. Janet Yellen warns House members of economic collapse from default. Yes, the other Ponzi scheme where we have to keep on going further and further into debt just to meet our payment obligations, our financial obligations. And here's an example of more contagion. Declining U.S. bank reserves add wrinkle to contentious debt ceiling issue. So yes, bulls and bears, things are beginning to get very, very interesting. Grab your popcorn, fasten your seatbelts, whatever you think you need to do to keep yourself safe. Have some money out of the banks, obviously, is what I am doing. But some people don't have much money to keep out of the bank, anyways, because the savings rate has plunged now to the lowest level since the financial crisis. So we're at a crossroad, folks. We're not going to get out of 2023 without more big stories like this. And we're all going to notice this in some way. This affects all of us, even if you don't have your money in one of these banks. When the system starts crumbling and cracking, you're going to see things really escalate. So if you're losing billions of dollars as a company, are you going to do more hiring? You're going to hire more people, or are you going to be more likely to start laying off more people, right? So expect things to get worse, layoffs, cost of living higher. I hope I'm wrong. I hope we see deflation and falling prices, falling cost of living. That's normally what we see during a huge economic downturn. Will this time be different? Well, yeah, well, likely a lot worse because things are a lot worse now than they've ever been. The debt levels are higher, the deficits are higher, government debt, city, state, local debt, corporate debt, consumer debt, everything's worse than it was before. So, of course, it's going to be different. It's going to be worse this time. And we just have to continue to be careful out there and know what's happening. So, what do you think about the bank and the CEOs losing money, the panic, the narrative that these companies are putting out there? Everything's fine. We have enough to keep operational for 12 months. Don't worry. Don't sell your stock. Don't panic, is what they're saying. Please let me know what you think down in the comments, everybody. Thanks for being here. I'm going to wrap this one up. We'll be back hopefully tomorrow with another report. Hope to see you here again on this channel. Big love. Keep stacking. Bye for now and peace.